Lock in, lock in, lock in. It is time for Market in the Morning, guys. Welcome back to another episode. And are we excited, guys? Because today is Wednesday and we have the one and only Imre joining us. So make sure you run that like button up, hit that follow and subscribe. I hope you're excited. We're going to make some money today because Market in the Morning starts right now. Yo, Imre, good morning, man. How are you?
Hey, good morning, man. I'm doing great. How are you?
Bro, I'm doing good, man. It's Wednesday on that win streak from the past 2 days. No pressure to you, but we got to keep that rolling.
Nice, man. Nice. Yeah, we got a lot going on overnight. Looks like this ceasefire is tenuous at best, but the market reaction has been fairly muted. So going to be extremely interesting to see how we open up. Of course, we had the ADP report come out as well at 8:15, came in a little bit above forecast. But if we take a look here, it is a bullish signal, and I think it does alleviate some of the fears that we've been seeing in the job market as of late. But whether or not we're going to get a dramatic reaction to this remains to be seen, especially when we have the backdrop of this renewed hostilities with Iran, let's say. I mean, it's pretty low-grade stuff, nothing extremely concerning, but as of yet anyway, but we'll have to wait and see how the story develops. And when I say it's not extremely concerning, I'm talking about the market's reaction to it. We had a sell-off that was bought up, and we've been drifting lower since, but it's not a very dramatic reaction. If the market certainly doesn't believe the risk of full-on war breaking out again is very high. That is for sure.
Okay, so that's good. But what about now? Obviously, hopefully it doesn't break out again, but there's definitely been some continuation. There's been back and forth, missiles being intercepted again. Do you think this war is going to be something that's dragged out through midterms, or do you think maybe they try to slow it down before then?
Yeah, this is an interesting thing, right? Because to an extent, Iran is very much in the driver's seat. And Iran is not stupid. I've said this before on this show. They know about midterms. They know that for Trump and the Republican Party to have a shot at really winning the midterms and ensuring that his presidency is effective till the end of its term, this thing has to be resolved, or at least perceived to be resolved. And the closer we get to the fall, yeah, I mean, we're in June, so there is a lot of time here. But the closer we get there, the more time is against Trump. So it'll be interesting to see how this drags out, what the consequences are. But the bottom line is you have a market that's been trading at all-time highs, climbing that proverbial wall of worry, which is what bull markets tend to do. And we've had these periodic little spikes that get bought up extremely quickly. So as far as the market is concerned, everything is copacetic. Everything's going to get figured out. Pricing in, I would say, the absolute best possible outcomes here to everything. Now, is that in fact likely? I would say it's unlikely that everything gets resolved absolutely perfectly, but that's the market that we're seeing right now. So from a trader's perspective, what does that mean? It means that the risk, the higher we go, actually gets skewed more and more to the downside. Does that mean that you should be shorting this market blindly? Absolutely not. That's not what it means. What it means, and I'm speaking more from the perspective of someone with longer term portfolios and positions right now, what it means is that I want to consider either de-risking my portfolio. I might want to de-risk the sensitivity I have to certain names. I probably don't want to be doubling down on pure momentum right now, especially with volatility being fairly suppressed, right? So it's not that just because risk is starting to skew the other way, in my opinion, in the very short term. I do think we're due for a little bit of a correction here, just even on a purely technical rotational basis. It doesn't mean I'm outright bearish. It just means that I want to be a little bit less aggressively exposed to some bullish names.
Okay, that's awesome, man. Great feedback on that. Let's cover a little bit of ADP one more time, just to sort of go over like the insights that ADP brings to relationship to non-farm payroll. And then let's dive into some technicals and some fundamentals on gold.
Yeah, let's do it, man. Let's do it. So, what I love about the market terminal is that you can click on that little brain AI icon and it's going to bring up what the impact of the report is going to be. You can see the impact on, whatever asset class you want to see. So we can go to the stock market here. We can look at the dollar, and it's going to give us what this report actually means for whichever market class that you're looking to trade, which is fantastic.
That's awesome.
I also love the relationship here because obviously, as we're coming up on the first Friday of the month, we've got the big boogeyman employment report, which is going to be the non-farm payrolls. So I'm curious to hear your take on that, Kevin. What do you think? We've got a very good reaction here to, not a reaction, but a good report here from the ADPs. What do you think that's going to mean for the non-farms?
It's going to be tough. I don't know if it's going to be strong enough to really make that big of an impact. I would really, again, like you mentioned, with what's great with market, I'm going to show my screen for a moment, is that we could come down to non-farm payroll. We could hit the brain icon, right? And it'll give us an idea of our predictions market, which is, in my opinion, sick, right? So it says how many jobs added in May. And right now our leading is 39% for 50 between 100,000. So, do we come out within this range? We could also look at our historical data on non-farm payroll too, and that's also been pretty all over the place. We have some times where it's negative 105, other times where it's positive 130, then right back to negative 92, right back to positive 178. Very up in the air. I feel like this current jobs market, I think it's in a worse condition than some of these reports are saying.
Yeah, that's a very interesting point. Okay, so remember some of the big changes. Well, you remember some of the big changes that happened, to a lot of the administrative functions that actually gather this kind of data and report them. So the market's kind of adapted to that, and there are ways of peeking under the hood. But I am going to stay very neutral on that topic. I believe that what you're saying could be absolutely true. I think that issues in the job market are definitely warranted to consider, especially in light of how AI is transforming the landscape. However, the market does not care. The market does not care. And so, if we're taking a look, and I've just pulled up the interest rate tracker here, we can see that so far anyway, and we'll see if this changes after Friday. So far, the most likely outcome here is no change.
Yeah.
But if we look at July, we can see that the odds for a 25 basis points hike has increased ever so slightly. So that's really, really interesting, in my opinion, to keep an eye on this. If you want my view, I think the key thing to look for is going to be a steady decline in these employment reports, and that's going to spook the Fed. That would be one potential reason to look at easing. That could be, but as of right now, this is just, again, my humble opinion. Employment reports are not necessarily what I'm looking at as the main fundamental driver for large-scale institutional positioning over time, because the narrative here looks to be fairly steady as she goes, at least in the officially reported data. The moment that starts to change and shift, we could see some repositioning. But as of now, I think these events have day trading volatility potential and impact, but not necessarily longer term impact as of yet.
Yeah, I'm 100% with you on that. I feel like at this point, with all the speculation of the war, the whole AI trade going on, markets have not really been having much influence by, even like CPI gave us a bit of a pullback a few weeks ago when it came in at 3.8%. We had a 2 to 3% pullback on the ES and NQ just for it to rip higher at all-time highs again.
Yeah, exactly, right. And like how it might strike a lot of traders as like, how insane is that? But again, here's the reality with markets, and the fundamental relationship, the technical relationship between what's going on, the data that's coming out, the candlesticks that we're all looking at, and what the market actually does, it's a little bit more nuanced than saying 2 + 2 = 4.
Yeah.
So there is
A little
this.
past that.
Yeah, and the reality is that markets are driven by sentiment. Markets are emotional creatures. Markets are largely efficient most of the time, meaning what? Meaning that a lot of the information is effectively priced in. So what you want to look for are those moments in time, those opportunities when the market gets inefficient. And if you're a day trader, you're going to look for smaller pockets of inefficiency. And if you're looking for swing trading or position trading, you're looking for larger moments of inefficiency that are going to take place over a larger period of time. And both approaches are entirely viable. But the point I'm trying to make here is that bull market, the strongest sign of a bull market is when all news is good news. Bad news is good news is good news. And here's the other thing. Bull markets don't end because of bad news.
Right.
That's one of the biggest misconceptions I've ever seen out there. Bull markets don't end because of bad news. You'll often see that people assign the top using the benefit of hindsight to a piece of bad news that came out. For perfect example would be COVID, for instance. But generally speaking, you'll actually see the top form while the news is good. Why? Because buyers have simply run out of steam. When there's no one left willing to buy, the market is going to start selling off. Bad news is the catalyst, is the accelerant, but it's not typically mirrored with the actual top. And it's the same thing for bottoms with bear markets. Bear markets don't end because of good news. They end because sellers are exhausted from selling the market, and there are no sellers left when that next piece of bad news comes out. It sounds a little bit counterintuitive, but it's a very important shift in terms of how you want to think about fundamental events. For example, I bet a lot of people blew their evals or their funded accounts on that sell-off spike in equity index futures overnight, right? Iran's launching missiles and drones. We got to short the market. Well, hang on a second. In this bull market, even bad news so far seems to be good news.
Right. Yeah. No, it's definitely something to take account of. It's funny. It's something we cover every market stream, right? Is how are markets? Obviously, it's important to understand the headlines, see them as they come in, break them down, see where the world's positioned right now. But it's also important to understand how markets are reacting to those headlines.
Yeah, 100%. Should we dive into some technicals?
Dude, let's do it. Before we do, I want to share my screen real quick. Quick shout out to Nalab and myself yesterday on the re-entry, but absolutely killed it on gold shorts yesterday, man. That was amazing. Nalab took this first breakdown right here. We pulled back. I mentioned, guys, now's a good time to re-enter. The moment I said that, the reaction, no look back. It was one of those trades with zero drawdown. It did take some time to play out, but it did end up hitting full TP. Great trade. I'm definitely looking forward to possibly some more shorts on gold. We saw even overnight we continued on lower. But yeah, let me share your screen. Let's break down some technicals and some fundamentals on gold.
Love it. All right, we'll start off with gold. Gold, been talking about a couple of levels in gold for some time, and my levels in gold have not really changed, to be honest. I've been talking about 44.11 for quite some time. Finally got it hit last week. And my thesis for this week is this control zone right here, spanning 45.36 to 45.86. So long as we're below that control zone, I'm looking for further downside. So the 44.11 target can definitely be in play once more. And then below that, I've got 42.59. Now, those are final targets. My trading style, I don't set a target and wait for it to get hit. I actively manage my risk. So I'm actively scaling in and scaling out of positions depending on how the trade is unfolding, right? So typically, the closer you get to a target, the greater the risk that you are now carrying, especially if you have it in your mind that I need the market to hit this target, right? So if you're a few ticks away from hitting a target and you have your full position on, and you're not willing to manage the trade actively, you're setting yourself up for potential disappointment. On the other hand, if you're not skilled at active management, if you don't really know what you're doing, you're going to cut winning trades too early. You're probably going to sit in losing trades too early, or you might bail on a trade because it's in heat, because it's in a little bit of drawdown without giving it the chance to work out. So one thing that we talk about all the time is conviction. I talk about it all the time. Jeev, Capital Hungry, talks about conviction all the time. It's so important to have conviction in your ideas. But conviction does not mean certainty. I'm never certain. There's this great saying by my friend and market wizard Peter Brandt, which is have strong opinions weakly held, right? So I've got strong opinions here that this control zone is relevant, but I'm not married to that opinion, and I'm happy to shift gears accordingly. So we're on a 4-hour time frame here. If we start taking a look at a 5-minute time frame, we can start seeing a little bit of this developing market structure. Now, I have a slightly different take in terms of how I want to read this type of structure. So here's what I'm going to do. What I'm going to do is I'm going to draw a market profile over the structure here, and we get this funky looking thing on the left-hand side. And all this does is it shows us where the bulk of trading has occurred. All right, now we can see we've got the 2 dashed lines and then that solid red line. That area altogether here is our value area. And that is where 70% of all trading volume actually took place. So you'll notice that in this area, we've got these larger nodes. These are high volume nodes. And then we have little low volume nodes, low volume corridors, cliffs, you can call them as well. Those are areas where the market moved very, very quickly. Now think about it this way. If I'm a buyer and we ripped the market higher and there wasn't a chance for sellers to really get involved here, what does that mean? It means when the market returns to an area of low volume, I want to see if the side that created that low volume node is going to step in and defend it. If they are, there's an opportunity to potentially trade with that previously dominant force. But one of my favorite setups is when we're in a low volume area and the previous side is no longer there to defend it. When that happens, what do you get? You get acceleration, very, very quick moves. Okay, so this is a setup that's really timely to be looking at in gold, because what did we see? We saw buyers try to redefend. What's this? The value area low. Okay, so this is the low of the value area. One of my favorite bullish setups is when we break into the value area low, test it, and then break out again. Here, we're setting up for what is called a value area low failure. So we looked above the value area low, and we might fail to reclaim it. And if we break below that swing low, you'll notice that we don't have a lot of high volume activity until we get closer back down to that old 4411 area, right? So as far as day trades go, that's definitely on my radar. However, a defense of this low volume, of this value area low could lead us to trade back at least towards the point of control. The point of control is the highest volume node in this volume profile, all right? It's where the most trade took place, and you can think of it as a potential magnet that's going to attract prices. My secondary target would then be a rotation back towards the value area high, which, as you can see, coincides with this market structure up top. Right, so that's my game plan for gold. Do you have anything that's a little bit different here, Kev?
Yeah, so I mean, same concepts, right? I use volume profile as well, low volume shelves, value area, 70% of the volume. Fantastic. Something I'd be really a bit more interested in today on gold would be more of a slightly bearish play, seeing how things haven't really changed just yet, but sort of the flip side of what you were looking at, right? So instead of taking the low volume shelf to the downside for a long position, I'm actually waiting to see if possibly New York session or towards New York session, we have COMEX. It brings us higher towards that 4,500 level. If we could get back towards 4,500, would love to see a rejection of the value area high.
Yeah, that's a fantastic game plan as well. Now, what's really cool about looking at profiles is that they show you things that you simply cannot see with a candlestick chart. But if we do look at the candlestick chart, what we can also see visually are areas where the market has previously agreed on fair value. These little trading ranges, as we like to call them, right? And we can see here, there is definitely a trading range that was established. And this is where the market previously agreed on fair value. And it's right there at the base of that range, I would say, comes in right around 4,500. So that's a level we definitely want to keep an eye on as well. So a rejection of that could certainly set the stage for significant weakness. And again, like my first significant target would be back at 44.11, looking to potentially scale out on the way there.
Yep. Awesome. We got a beautiful comment from Dino over here. I love how Imre talks about the interaction between buyers and sellers and creates a visual of price action as a battle where the front line facilitates back and forth depending on who's in control. Yeah, Imre's all right.
Yeah, and like that's a fantastic way of understanding this. Markets are just negotiations, right? They're just a negotiation between buyers and sellers, and someone is either winning that negotiation, losing that negotiation, or we're in a stalemate. Now, just going back to the market terminal dashboard for a moment, we can see that the day trading bias here is slightly bearish, supporting some of the stuff that we're looking at. Now, the terminal's got a little bit more of a shorter term target than I would, 44.55, and that of course lines up with the swing trading bias being still slightly bullish, right? So we do have a variety of ways to play gold. I always like having a couple of scenarios in place and having what I call conditional triggers, right? So what does that mean? Think of it like if this, then that. If this happens, then that becomes my game plan for the day. But if that happens, then this becomes my plan for the day. And the reason I like to think of the market that way is because it allows me to predetermine ahead of time what it is I want to be doing. If I can predetermine ahead of time what it is I want to be doing, guess what I'm less likely to do? Stupid, emotional, impulsive decisions in the moment. So next we'll look at crude, and we can see here that the bias for both swing and day trading is slightly bullish, right? And we're going to take a look now at how crude's been shaping up, what my analysis there on crude looks like.
Awesome.
Love trading crude on Wednesdays because we have that EIA report, 10 a.m. Eastern. All right, so my levels on crude haven't changed that much either, okay? And I have been playing crude like a fiddle. It's been a really, ever since this Iran war started, crude has been my best performing asset. And I don't typically trade energy all that much. All right, so we found support here in what was a downside target for zone for me from last week, which is 88.86. And similar to gold, you can see we have a control zone, 97.94. We're testing that right now. And you can see what does that control zone just happen to line up with? A very high volume node. Okay, so this is where buyers and sellers were engaged in a little bit of tug of war, okay, in that zone right there. So what happens if we break above it and we start building value, a little trading range above it? Well, that tells me that value has migrated from down here to now up here. And that potentially puts my upside target level, my upside target zones into play. First target level would be around 102.52, but I see potential here, a little bit lower, anywhere around the $100 to $101 region is a good place for me to start considering de-risking as well. On the other hand, a failure to build and sustain value above this control zone could see another rotation back towards this support zone at 88.86. So I've got these fairly clear parameters in play. So long as we're above the control zone, I'm going to give bulls the benefit of the doubt in terms of how they control the auction up top. And likewise, if bulls are unable to hold this control zone, then it puts bears right back into the driver's seat. What would be really exciting to me is, and take a look at this. We have low volume corridors. We have a low volume corridor through here from the control zone to the upside target level, and we have a low volume corridor from the below the control zone to the support zone as well, right? So I really want to ensure that when I'm trading, I don't have to trade through a high volume node, right? If you're trading breakouts, if you're trying to trade momentum and you're trading those breakouts or those momentum plays, watch what happens when you reach a high volume area. Typically, you're going to get a slowdown, right? Yep. You're going to get a slowdown in price.
Yep.
All right.
That's
our comment on gold.
Yeah, real quick, before we jump on gold, what do you mind breaking down for anybody who hasn't heard, you mentioned low volume corridor. Are you just meaning where the volume clearly starts to decline from that peak?
It's not, yeah. So when you have a high volume node, what that means is that there was a lot of trade that took place there. And by a lot of trade, I mean buyers and sellers both willing to engage. Okay.
Yep.
So what does that mean? If we see a lot of buying and selling activity take place in a range like this, what does it mean? It means that we have likely the presence of larger institutional players in the market. Okay. So the volume tool I'm using, it's on TradingView. There's a variety of them. If you go down to forecasting and measurement tools, you can see there's a fixed range volume profile I favorited, as well as an anchored volume profile. Now, here's how it works. Okay. You can draw a fixed range volume profile over pretty much anything. So I'm just going to use this current consolidation that we have right here as an example. So I'll just clean up this chart. Love this, guys. We're going to school. So if I draw a fixed range volume profile over this, we can see that this little consolidation area here has its own value area, right? So the area between the upper dash line and the lower dash line is the value area. It's where 70% of the trade took place. Now, what's considered fair value is what's within the value area. What's above and below the value area could be considered unfair prices. So why do breakouts, the first breakouts, typically fail? Okay, it's because this is the first attempt at migrating value outside the value area, but we're not done doing business yet, folks. We're not done doing business. What do I mean by doing business? Well, big players need to be able to exchange inventory. So that inventory would be, for example, futures contracts. So if buyers want to get rid of their futures contracts, they have to sell them, and they have to sell them. And those sellers who want to sell their futures contracts, they need to sell them to a buyer, right? Because for every buyer, there's a seller. For every seller, there is also a buyer. So institutions love when the market stays within a value area because it allows them to exchange inventory at fair prices. Imagine if we were trading Pokemon cards, right? And, you know, like I should not have said that because I know nothing.
I know
about
what
Pokemon.
Imre does on the weekend now.
But if I have like a very valuable Pokemon card and you have a very valuable Pokemon card, and we both agree that your card is valuable, my card is valuable, and you know, you want my card, I want your card, we can do a fair exchange. But what if I think my card's super valuable and yours is not? I'm going to say, all right, Kev, I'll take your card, but you need to pay me on top of giving me your card to get my card, right? And you might say, well, I disagree with that. And that's where the negotiation happens. So this is basically what happened here. Buyers thought gold was cheap enough to take higher and higher, and sellers disagreed. And the same thing happened down here. Sellers thought gold should be priced lower, and buyers disagreed. So you can see right now we're in that fair value range. So typically what's going to happen is you're going to see fades at the extremes of the range. This is a beast of a move because this looks like a legitimate breakdown, but it's not. And what we're going to see is trade take place within the value areas until the market is finally ready to move. Now, this is guys, this is absolutely free edge, free alpha. This is one of my favorite trading techniques of all time. You just have to be patient. If you can't be patient, this is not going to work. All right. What I love to do, we'll actually use this as an example, is wait for the market to break out of the value area low or the value area high. I then want to see something very specific happen. I want to see value build below the or above the value area. This is value building. It's a range. Notice how there's like a lower boundary line to that range. And then I would say the fair value of that range is right about there. What I want to see next, if I want to be short, is for a breakdown of the secondary range that occurs. That's how I trade a breakout. I never trade the first migration out of value because it tends to be a fake out. Okay, so I want to see value build, and you can see that happen so clearly right here. Look at what happens here. We have failed breakdowns. We have a probe above. We have a probe above. This one failed. We didn't build value. Notice how here, if you're chasing this, you're chasing the breakout. You're too late. People see this candle, they think that's a strong candle. Let me trade the breakout. Wrong. We didn't build value. Here we built value. Notice how here we start building a clearly defined range at the value area high, just above the value area high, but we don't get the trigger. We don't get the trigger, which is a breakout of this range. In fact, we get the opposite. So this is a short signal. And then look what happens. We get a breakdown, we build value here, and guess what? I can nest these value areas. So I can build that range there. What am I looking for? I'm looking for a strong breakdown below the low of the mini range of the new value area. That's my short setup, the continuation setup. Okay, so be patient, wait for the micro range, as I like to call it, build outside of the primary range that you're looking to trade.
Beautiful. Somebody says, how can I combine this with fundamental analysis using market?
My
Great
brother,
question.
I've got you. All right. So if you're looking for a momentum play, you need a news event, in my opinion. It doesn't mean you have to have the news. It doesn't mean the news event's at 8:30 and you take the trade at 8:32. But there needs to be some kind of news event, some kind of fundamental catalyst that's driving that energy, that's driving that momentum. So that's number one. Number two is take a look at the terminal and say, hey, am I aligned with the bias?
Right.
It's okay if you're not. Like then you just have to keep in mind I'm trading a reversal. I'm trading a reversal. And that's fine as well, so long as you know that you're trading a reversal and you're not trying to get too cute. Okay. I personally don't love trading reversals. I tend to have a bias in mind, like gold, I'm bearish until this happens, or I'm bullish until this happens. I'm not bullish and bearish at the exact same time. There are certain conditions that have to be met. And then finally, I want to see, is there any breaking news? Is there any high impact news? Anything that's hitting the news wires right here, right now, that could cause an inefficiency in the market? Meaning, let's say everybody's bullish on gold and we can see, what would flip it bearish? Peace deal, reduce war scare buying from importers, sure. Prospect of U.S.-Iran accord reopening the Strait of Hormuz. Let's say some of these things that could flip the bias bearish actually start to happen. Well, now you have that catalyst that tells you that a lot of traders are probably trapped in the wrong direction and we could see rotation, right? So I always want to pair the technical setup with a fundamental driver. The fundamentals tell you where to look. The technicals tell you what to do, right? So it's a two-step process for me. Fundamentals, what I want to be looking at, where I want to be in terms of direction, and the technicals actually have to give me that trigger. It's a relationship between the two. It's not that one or the other is more or less important. Okay, now we're going to take a look at my baby, all right, which is ES. This is my bread and butter. Trade this all day, every day. I'm a slave to this market. And that's just a function of my job, all right? My fund, we trade extensively on SPX options and in futures markets on ES. So this is the market that I know inside and out. So here you can see, instead of a candlestick chart, I've got a profile chart. And this is the best way to understand whether or not you're looking at a trend. It's not just a series of higher highs and higher lows. It's whether or not value is actually building higher or lower. Okay, so again, same thing here. I want to be pairing this with the market terminal and understand what the fundamental bias is. Right now, we're all systems green. So how do I know if value is building higher or lower? You can do this on TradingView as well, by the way. I'll show you guys what that looks like in a second. The data is slightly different. If you're looking at real order flow, you need a real order flow platform. And TradingView for just is a little bit different. Okay, so this is a bit more of a professional tool, but TradingView gets the job done as well. What I want you to pay attention to are the purple horizontal lines on these daily profiles. Each of these profiles here is 1 day's worth of action. The purple line is the point of control. It's where the most trade happened. It's where the most volume was traded over the course of that day. And what we notice is that steadily we see what? The purple lines moving higher and higher and higher. Sure, we get pullbacks, right? We get pullbacks, but broadly speaking, the purple lines are moving higher and higher and higher. That is literally the definition of value migrating. So when the purple lines, the points of control for each daily session, stop aggressively migrating higher in a process that is typically known as one time framing up, well, what does that mean? What that means is that now the market is consolidating. It's taking a breather. So when the market's consolidating, is momentum the play? Is that the playbook I want to reach for? The answer is no. I want to look at more of what I call range-bound setups, right? So I want to be buying lows and selling highs. So I have to take that into consideration as well. Not every day is going to be an aggressive trending day. So if I look at the last, 3 sessions, what do we see? We see the point of control being what? Fairly in line with one another. That means what? And I can combine these. I can combine the last 3 days, right? And let's take a look at what that profile looks like and how that shapes my expectations as we head into today. So we can see right now, by the dashed line that we're trading below the point of control. So this is where the market agreed on fair value and buyers were unable to take the market higher. So where am I looking for potential support, for potential demand? Well, I'd be looking at previous days' points of control. So for me, that would be potentially the area between the last 2 days' points of control right here. Okay, so that's potentially a level that I want to be keeping, or a zone that I want to be keeping an eye on, roughly, let's call it 75.80 to 75.96 or so. That's roughly the area that I want to be keeping an eye on. If we lose that, take a look at what happens on the right-hand side here. We have a low volume corridor. So at which point we might start trading back towards where we previously had agreement on fair value.
What software is it?
So this is called Deep Charts, but there's a ton of order flow related software out there. And I'm going to show you guys on TradingView how easy this is to do as well. So you don't need necessarily this type of software. You can easily start taking a look at other kinds of things as well. Now, on TradingView, what most people are accustomed to looking at is a candlestick chart. But of course, there are other types of charts as well. And I can take a look at, let's see, what do we got? A session volume profile chart, just like this, right? And we can see what? The exact same thing. Our last 3 sessions, we can see that the points of control are fairly aligned, all right? So it's just a different type of chart. It's going to give you different information. It's going to show you whether value is building higher or lower session over session, okay? So if we take a look, my ES chart on TradingView, which is where I do a lot of my markups and labeling. Also been a fantastic trading environment for ES, been a very predictable market. We can see here, we had an upside target from last week, which is now my minor support zone, held very well to start the week. We hit my first upside target zone, and we're now doing what? We're building value. We're building value higher. Now look at this. We failed to move the market significantly beyond the value area high. Up here, we actually built value. We traded sideways for a while. We got that spike down yesterday. We came right back up, but guess what? We were unable to continue migrating value higher. So what does that mean? I'm looking for rotation now. I'm looking for the market to rotate. Where? I'd be looking for the market to rotate first towards the point of control, so closer to 94, and then potentially back down into that minor support zone. All right, so that's how I love to structure and combine the fundamentals with the technicals. So going back to Market Edge, we're going to take a look at ES here, and we can see what we see, that pullback area at 75.68 on the terminal. For me, that's a little bit lower. That would be in this low volume corridor. Certainly possible that we head there. Nothing against that level, but the pullback areas are roughly in the same place. But the swing and day trading biases are bullish. So what does that mean? What this means is that we have a potential range forming, but I would favor being a buyer over being a seller, because guess what? We still have an uptrend, right? So given all of that, I can start forming not just a narrative for the day. I can start understanding what kind of unexpected fundamental headlines to watch out for, what could be hitting the wires, and then most of all, I need to be keeping an eye on the economic calendar so I'm not taken surprised by anything that's coming out. Okay, so speaking of that calendar, we can see right here on the dashboard, of course, what do we got? 10 a.m., we're going to have some news. We're going to have some manufacturing news, and that's going to be something that's worth keeping an eye on. We're going to have, of course, the ISM services report as well. So we just want to keep an eye on those news events so that we are not taken by surprise. Because guess what? If you're in a trade, you've got a tight stop, your idea could be perfectly correct, perfectly valid, but that news event can shake you out of your trade.
Something I always like to keep an eye on in the mornings too, before sessions start, we start taking trades, is to see where oil is sort of at. And at this point, it's ranging. It's at $96. It's been within this range of about 80 to 85 to 105 for a while. I remember a couple of weeks ago, We covered oil was at the top of its range around 105, and I believe it was one of our sessions, and we said this is the perfect spot for us to get some type of headline. And just that day, we got that headline and oil moved lower. There's not much going on news-wise that oil is really taking in for account, and yet it's refusing to move lower. I always like to mention to people that even if the war were to end today, we still are going to see months and months of higher oil prices, because it's going to take so long for that extra oil supply to make its way around the world, to make its way to that delivery point that it was going to be at. Do you agree? I mean, if the war, let's say a peace treaty was signed today, do you think oil's just going to drop like a rock right back to that 75, 65 range? Think it's going to take some time?
It's a good question. So fundamentally, from an energy supply perspective, supply has been severely impacted. Right?
Yep.
I like to keep a micro chart up as well for the micro contracts, just to keep one that's clean if I need to relabel it. So
you could do specific. If you look up CL and then hit the little arrow that comes up in the search on TradingView. So do CL and then that little arrow, and you could choose a monthly contract, and that'll also give you a clean chart.
Yeah. Now that's actually a very interesting point, and we're going to go to some of the longer dated contracts. We're going to go to the Augusts in just a moment, but take a look at this chart right here. Just take a mental snapshot of it. Now let's talk about fundamentals in terms of oil production, supply and demand. By the way, the biggest fund that I've ever run was an energy fund. So this is something that I do know quite a bit about on both the supply, the manufacturing side, the refinement side, the services side. So it's a market I'm very sensitive to. It's not one that I've traded since I moved away from that fund, but it was the biggest fund that I've traded for. And this situation right now is really concerning to me from a long-term energy standpoint, for one reason, and one very obvious reason. It's that the damage has already been done. A lot of these oil fields, the natural gas fields, it's going to take time for them to be able to return to full production. It's also going to take time for full shipment to resume. Think of it this way, guys. If you've ever been driving and you're on the freeway or the highway and there's an accident, and that accident causes a huge traffic jam, even after they clear that accident, there's going to be traffic that's jammed up and built up, and it's going to take a long time for traffic to resume to its normal flow. That's kind of what's happening here with one of the most important trade passages in the entire world. We've got a huge traffic jam thanks to a bunch of mines that have been placed, an ongoing, tenuous ceasefire, whatever, memorandum of understanding, whatever you want to call it. And here's the thing, China, the US, world's two biggest superpowers, both want the Strait open. It's not good for either of them. Iran, the Strait is their biggest point of leverage, right? So that's the biggest card that they have to play, and they're going to play that card for as long as they can to get the best possible deal that they can. So nothing fundamentally at this moment in time leads me to see a complete collapse to pre-war energy levels. So what does that mean? By definition, that is going to be inflationary. By definition, that's going to be inflationary. So this is how you can start looking at these kinds of pieces of information, put them together. It's a huge puzzle. It's like the world's most complicated, biggest puzzle, right? And energy is, in my opinion, the linchpin to the bull market run that we've had so far. If energy prices continue to climb, I just simply do not see how we can sustain current market valuations. It's logically improbable. I don't want to use the word impossible, but it's logically improbable. Now, here's what's really interesting, though. If we take a look at something like the August contracts, you can see that right now we're slightly below where we are right now. But we're pricing, what does this literally mean? It means that for August 2026, a couple months from now, we're still pricing oil at being elevated. Literally what it means. Now, we can take a look. Okay, so we've got November, December, Let's take a look at what we're looking at as we're heading into midterms. This is where it gets interesting. This is where the market sees oil prices coming back down, softening by the fall. All right, this is a very important contract to be looking at, November and December. So that was the November futures. Let's take a look at the December futures. Even lower, around $82. Now that's based on information that we have right now. What if this market is wrong? What if by the winter time, the fall winter, oil just keeps climbing? What if? That's a really interesting question. You know, and to me, that sets up some fascinating trades as we head into that time of the year. Now we're taking a look at the DEES contract here. This, to me, is a very neutral price formation, right? So I don't want to rule out the possibility that I'm wrong. And even with supply constrained, the market can say, hey, we've priced that in and we're gonna rotate oil back down to the $72 range by winter time. Sure, it's possible. But if I draw a volume profile over that entire period, what do we see? We see a gradual stair stepping. And what are we seeing right now? We're seeing value start to build around the point of control and the value area high. All right, so that gives me pause. It gives me pause to consider the Goldilocks scenario in terms of whether or not we're going to get a picture perfect ending to this conflict. So long as we're building value higher and higher, I'm going to favor higher and higher energy prices. That doesn't mean there won't be day trading opportunities to be short. There absolutely will be. Okay, there absolutely will be.
Awesome. We got a question here. Imre, when you're trading without market, how do you filter out the noise and understand what to actually focus on? Because you trade with the large funds, any noise can have a cost, can cost you a lot. But now that's sort of a double-edged sword, right? How do you trade without market? Whereas market is sort of that is the noise filter to say, hey, listen, pay attention to this. Look at this. Here's your pullback level. Here's the economic news. So it's in terms of trading without market, you're just going to hear noise.
So for context, that's a fantastic question. So for context, I used to have, I don't know, a team of research analysts, five or six. One would cover rates, one would cover currencies, and even in currencies, we had a breakdown for like the dollar, the yen, the eurozone, LATAM. We had an equities analyst for the main sectors, like primarily tech, financials, that kind of thing. And they would basically be the human version of market. But these are people with extremely credible backgrounds. They either have master's degrees, I think one had a PhD. A lot of them had years and years of institutional experience doing analysis. You think that's cheap? You think those salaries are cheap? They're not. I mean, they're hundreds of thousands of dollars. On top of that, the cost for Bloomberg Terminal, the cost for Reuters Icon, cost for the various macroeconomic firms that we hired out to do research and consulting for us, like our cost for research was 7 figures.
Right.
I mean, geez. Now does that give me a level of insight that's greater than the market terminal? Honestly, yes. I'd be lying to you if it didn't. But I mean, market does, I don't know, like 85% of the most important work for such a fraction of the cost. It just wasn't possible because we didn't have that technology back then. So we had to rely on human beings to do the heavy lifting. Now, I will say this. A lot of people think that Bloomberg Terminal gets you the data more quickly than like a retail service like Forex Factory or whatever. Okay, it is faster than Forex Factory. But Bloomberg Terminal doesn't do this stuff, doesn't do the news headlines any faster. It doesn't give you a better number. In fact, market goes a step beyond Bloomberg in terms of the analysis that it provides you with. Right? So that's super, super cool. And it's so amazing how far technology has come and how far, how much the gap between institutional information and retail information, access to information, has shrunk. The gap is smaller now than it's ever been.
Yep, that's awesome. So let's dial it back and let's bring in some market here, break down some fundamentals, and then if you want to cover this question, what will happen to gold when the strait is opened?
All right, so long term, I'm a buyer of gold. Long term, I'm a buyer of gold. Now, what's really interesting is that throughout this conflict, we've seen gold go up and the stock market go up in sympathy.
Right.
Now we're seeing that correlation start to break a little bit. Stock market's been going up. Gold has been selling off a little bit, right? So at the beginning of the conflict, a lot of traders were like, wait, isn't gold a safe haven? Like, shouldn't gold go down if the market's going up or vice versa? Well, at the time, the dollar was the safe haven. And in many ways, the dollar is like the ultimate safe haven. It's going to cash, right? So what's going to be interesting, my view is that we still potentially have lower to go in gold, but long term, I'm very bullish. Why am I very bullish? Because I don't think in the short term we're going to see significant tightening in monetary policy that's going to result in the dollar being the more attractive asset, right? So that doesn't mean we're not going to get pullbacks like this that look scary and violent,
right?
But gold to me is there are some assets where I will always buy more of. Gold is one of them. I will always buy more gold. And I'm talking long-term here. Like, I'm talking long-term. Gold is one of the asset classes that I'm always buying more and more and more of, right? And people have made fun of me for a long time for saying that, because what's the disadvantage to gold? You don't get paid yield. You don't get paid interest on holding gold. But to me, gold is what? It is in large parts a hedge against the dollar losing strength, losing status in the world. And I think that's a trend that is slowly going to continue and potentially accelerate throughout my lifetime.
That's awesome. We got some headlines coming in. If you want to pull up market and hit the breaking news tab, let's cover some of these headlines that came in this morning, what they could mean for markets as well. It seems like we got Kuwait to cut Iranian diplomatic staff following attacks. Kuwait can restore 70% of oil output in 6 to 8 weeks on Hormuz reopening. They released that 8 minutes ago. You think they're watching the stream?
Yeah, I mean, that's obviously, this isn't a surprising headline to me given the overnight hostilities. This is old news in my opinion. Like, this would have already happened. You know, we're just hearing about it now. Is that necessarily market moving? No, it's not market moving because it's already happened. Right. So it's important to be able to distinguish. Yes, it is breaking news. It is breaking news. It's not a headline that I would trade off of, right here, right now.
Awesome. Okay, what else? We got any other news? What I like to do in the morning too is go through the high impact headlines just to make sure I didn't miss anything overnight. Trump sees Iran blockade lifted by Labor Day. Okay, so now we're getting a bit of an expected, but I feel like we've seen headlines like this. We've seen, oh, we're gonna do this by the weekend, and then by the weekend an attack forms again. There's been this continuation. When you see a headline like this, where it's giving a specific day, where he's saying the blockade should be lifted, do you give this any weight, or is it, like myself, more of a wait and see? I'll believe it when I see it.
Yeah, Trump is quickly becoming the president who cried wolf. There's only so many times you can pull the same trick out of your bag, and there's only so many times people will fall for it. And I think people are just tired. I think people are tired of hearing him say things. And I personally don't put any stock or weight into anything the president says, and I haven't for a long time. That doesn't mean you ignore it, but it means that it doesn't drive my positioning in the market. So what's very interesting is you look at the difference between who is coming out and actually saying these things. Has Iran been coming out and being super upbeat and bullish on peace? Have they been the ones saying, yeah, things are going amazing with negotiations? Have they been the ones saying that?
No.
Nope. So, a rule to life is understanding incentives and constraints, right? That's game theory 101. Guess who's incentivized to keep the stock market up? Because midterms are around the corner. It's Trump, right? So he's very transparent. He's smart in his own way, but he's also so transparent and predictable. And that's what makes the Trump market so easy to trade. So, it's like, all right, you're saying this, buddy. guess what? We know why. And Nick just said it, Labor Day, 3 months away. I mean, like, guess what's also around Labor Day? Like, that's when midterm campaigns are probably going to be heating up, coming into full swing. So, or at least starting up. So there's obviously a vested incentive or interest for Trump to be saying these things. Has the Ayatollah said he's involved in talks? Has Iran says that they've agreed not to develop a nuclear weapon?
Nope.
Nope. Right?
Anything going to happen? Probably not. Yeah, well, Trump said, though, 3 hours ago that Iran agreed not to develop a nuclear weapon. I'm sure Iran's not going to come back and say, we never said that.
It is going to be really, really interesting to see how this plays out for
Absolutely.
All right, now here's what I like to do as we head into the open. I like to start fine-tuning some levels. Okay, so we've got 15 minutes, less than 15 minutes now to the market open.
All right, can we pull up TradingView? I feel like a lot of people will relate more with the TradingView charts. A bit easier.
Yeah, we can carry these levels over for sure. Let's take a look. A second here. 16. All right, so here we are. We're in this low volume pocket here right now. We've got the low here. From that overnight piece of news, which the market bought up. And what I'm very curious to see is how we deal with this high volume node as we head into the market open. And below that, we have another minor node. Right, these are just areas that I want to be aware of. And as far as being able to reclaim some structure for buyers, again, if we just profile, you can see that buyers have a lot of work to do. They have a lot of work to do before we can reclaim the value area low of any of this stuff. All right. So long as we're below the value area low, it tells me that sellers should be considered to be in control. Now, I'm going to give you guys another free bit of technical trickery here that I like to use. Okay. So I don't look at candlestick charts. Like, I look at candlestick charts at the open of the market and at the close of the market. I'm not trading off of candlestick charts for the rest of the day, right? But if I had to look at candlestick charts, there is a technical concept here called what I call strong swing points and weak swing points. Okay, this is a mechanical trick that you can use. A strong swing point, and we'll use this one right here as an example. A strong swing point is when you have like a swing high and it's higher than the two candles immediately to its left and to its right. So we can see that the swing high on this 5-minute candle is higher than the high of the two candles immediately to its left and the two candles immediately to its right. Taking out a strong swing point is more significant than taking out a weak swing point. So what is an example of a weak swing point? A weak swing point would be a candle that makes a high or a low, but is only higher or lower than one candle immediately to its left and immediately to its right. So we can see here that the reason this is not a strong swing point is because two candles over, that one has a lower low, right? So this candle has a lower low relative to this swing point. Now, yes, it's lower than the two immediately to its right, but it does not satisfy the full criteria to be a strong swing point. This is a strong swing high.
Awesome.
This is a weak swing high. This is a strong swing high. Okay, you guys get the picture. Now, why and how do I use these strong swing points? I use strong and weak swing points if I was trading off of candlestick charts for signals that short-term control is starting to change and for potential entries as well. Okay, love using this technique. It's very mechanical and it gets you into trades highly effectively. Okay, so for instance, if we see this rally and this pullback, and I want to get long, what am I looking for? I'm looking for a trigger where we're going to break either a strong swing or a weak swing. If you break a weak swing, your entry is typically going to be a little bit sooner. For instance, it could be here, you could have your low there, and then you could be targeting that upper target zone that I've got there, okay? This is on a 5-minute chart, by the way. So this would be my weak swing point. If we break a strong swing point, for example, this one right here, it's going to get me into the trade a little bit later, but what does it quote unquote confirm? It confirms that we have a little bit more strength behind that movement. Okay, so that's how I like to use strong and weak swing points. The best trades are when you have that strong swing point be the one that's closest to the entry that you want to be taking. So for example, right here, this is a strong swing. And it's also the first swing that's broken on the way up. Notice how if you use this concept, you wouldn't be really buying anywhere here. You're not buying here. Not really buying here. You're only buying here once the move is quote unquote confirmed. Okay, so I love using this technique to get into and out of trades. So for instance, if I'm in that bullish trade, let's say I bought somewhere down here, and let's say my target is way above this high, way above that high. When would I want to get out? When I start seeing maybe a strong swing or a weak swing start to break. Okay, so here, you know, I wouldn't be out just because we're taking out these candles lows, but taking out this candle's low, that's the first swing point, albeit it is a weak swing point. That would get me out of the trade. Okay,
That's
so
awesome.
Now it's important to note, now take a look at this, right? It's important to note that if you wait for a strong swing to break, it's going to be what? A more likely answer that the dominant trend could be starting to shift, and dominant is going to be dependent on the time frame that you're looking at, right? So a little bit of a technical tip there. If you're trading off of candlestick charts, which I'd imagine most people are, it's a fantastic way to ensure that you're staying a little bit composed, not rushing into a trade, and you've got some decent technical confirmation to be working with.
Awesome. Awesome. Let's talk a little bit about rates. I want to talk about, like, you know, Fed rate decision in June, the odds of a rate cut, odds of a rate hike now coming on the table. Do you think that at some point this year, if inflation stays high, oil prices stay elevated, do you think that there's a chance of a hike this year, or do you think they're just going to hold steady?
So I believe most likely that we are going to see pressure on rates. I've been saying this for a while. We're looking at yields. We're looking at yields start to climb. I think that is definitely something that we have to take into consideration. I also think that if energy remains elevated, what is that going to do? It's going to mean inflationary pressures are abounding, right? So that's something we definitely want to be keeping an eye on in terms of whether or not that's something that is going to start driving market behavior and market expectations. My view is that if we start seeing, let's say, 10-year yields start to hang around that 4.5, 4.6, 4.7, goodness forbid, 5% level, it's going to cause a lot of stress in the market, a lot of stress. Okay. And again, we want to be combining, right? We want to be combining the fundamentals with the technicals. So just because yields climb does not necessarily mean that we're going to see all these cracks start to immediately appear in the market. That fundamental view, that driver for me is going to be a little bit longer term. And I'll be looking at that Fed rate tracker, right, in the terminal. And I want to make sure that there isn't going to be some kind of crazy divergence between what I'm seeing with yields and what the market's expecting as far as rate hikes go. Now, here's the really interesting thing, right, from a trader's perspective. There is a time to be a contrarian. There is a time when everybody, the proverbial lemmings, are running off the cliff, you know, and you don't want to join them. There is a time for that. And the best traders in history who have made the biggest trades of all time have done a masterful job of being contrarians at the right time. Michael Burry being like the quintessential modern day example. However, Michael Burry's also been dead wrong so many times. Okay, so the art of being a contrarian is very, very tricky to master. Very tricky. Okay, and if you're always betting against the stock market, which broadly does what? Goes up and to the right. You're going to get it wrong far more often than you're going to get it right. Eventually, you're going to get it right. You're going to look like a genius. And for a brief amount of time, people are going to forget how many times you've gotten it wrong before.
I saw something online. It said Michael Burry, the investor that called out 50 of the last 2 market crashes.
Yeah, and that's, look, here's the thing. Michael Burry ran a very effective fund until he shut it all down. You can be a contrarian, get it wrong, and you can still make a lot of money.
Right.
Right. So you don't necessarily have to trade your views. You have to trade what's in front of you.
Yep. Awesome. We got market opening very soon, about 4 minutes. I just want to quickly touch up on inflation real quick. Then we'll jump into some ES and NQ, find some levels, cover gold as well. So inflation rising from 2.4% in February to now 3.8% in April. Obviously, most of that has to do with higher oil prices. Where do you see next CPI?
Well, okay, so that's a really, really interesting thing, right? Because we've had some surprises with inflationary reports, right? The wrong way, and the market's done a fantastic job of shrugging all that off. But we can see there, even on the chart, like you want to do some basic technical analysis and draw like a horizontal level over the top of that. Like we've broken out. You know what I mean?
Right.
So I see the trend in inflation going the wrong way, and I don't really see what can rein that in, unfortunately.
Yeah, no, I agree. A core PCE, core CPI moving higher. PPI final demand. PPI came out at 6% in April. Huge move right there. It's a lot to consider, but it's also a little bit worrisome. Like, okay, if all of our data is starting to show some red flags, how is the market continuing higher? What's really running this? And we know that at this point, what we've seen is a lot of it is being AI hype. SpaceX coming out soon with an IPO. Now, SpaceX IPO, and I won't dive too deep into this right now because market opens in a couple minutes, but they're going to be listed on the NASDAQ within 15 days of their IPO, which forces people to be buyers of SpaceX as long as you invest in NASDAQ. So a little interesting there. They're coming out with at a 1.8 trillion dollar market cap, whereas Amazon took 3 decades to hit a 2.8 trillion dollar market caps, and SpaceX also showed a net loss in Q1 of this year. A lot to consider, seeing how big of a market cap it's coming out on, how it's sort of forcing market participants to buy it with the IPOing and then 15 days later being introduced into the NASDAQ. Really a lot going on at that point that, in my opinion, I don't think SpaceX at a valuation of 1.7 trillion, 1.8 trillion, even 2 trillion, I don't think it's a valid area. But we also know that anything Elon related, right? Even Tesla, great example, PE ratio, Tesla does not care. We stay above those PE ratios with strength.
Yeah, it's valuations are always an interesting thing, right? Because you can look at how historically the market's been valued, and then you can throw that out the window because the environment overall has changed so much, especially with the advent of QE, especially with how people are starting to price in how a lot of these tech companies make money and what their business models are. I think Uber for me was like the big wake-up call, when that stock performed in a certain way despite not turning a profit for so long, right? So markets are always going to be forward-looking discounting mechanisms, right? And that's going to apply to valuations as well until they don't. And then suddenly Kramer's going to say, hey, I've been telling you about inflated valuations and P ratios and all that kind of stuff.
Yeah.
Right?
Now, I got a question here. What do you think happens to NASDAQ once SpaceX IPOs? Does liquidity tighten up and NQ falls?
I have no idea. I don't even want to begin answering that question. My personal preferred scenario would be, we IPO, we rip higher, people rug pull, they take a bunch of profits, and then we get a violent rotation, and that could be a phenomenal buying opportunity. Like that would be cool. I have no issue with that.
Yeah, that would.
But could we just rip higher and higher and higher? I find that unlikely. I find that an unlikely scenario. But I honestly, genuinely speaking, I have no idea. I don't know.
Okay, all right. Listen, let me tell you what I think is going to happen. I tweeted about it yesterday. So I don't know if you guys have seen, but I posted the other day, there was a chart showing that the Knicks played the Spurs in the finals in 99, and then a year later, within that year, markets collapsed, markets broke. Well, guess what? Knicks are against the Spurs in the finals now. SpaceX is going to IPO at a ridiculous market cap valuation. Anthropic is also going to IPO with almost a $1 trillion market evaluation. I mean, this is insanity how high they're coming out on their IPO. It's like how much more room. Usually when they IPO, they give themselves that area to say, okay, let buyers come in and raise that price. But now they're coming out that high. Where's the ceiling?
Yeah. So all that to me, right, is concerning. It's concerning to me from the perspective of how long can we sustain this for? And it's why I said, like even though we have a bull market, it's now reaching points where I want to be very careful in terms of how I'm positioned, where I'm exposed, what kind of leverage I have here.
Yep. Cool. Okay, so how do you tackle that no trading until things go back to normal? So no, it definitely depends on your perspective and what kind of trader you are. If you're a day trader, we live for volatility. We love these extra big moves. We love even uncertainty. Uncertainty drives markets usually to the downside. So will that bring uncertainty and a strong pullback to the markets? Then we're going to take advantage of that, right? Our market AI terminal, it's going to catch what's selling us off. It's going to tell you, it's going to keep you up to date every single day. So definitely take advantage of that.
We've got a pretty strong open here, don't we? Stocks, very interesting. Gold drifting lower. Crude selling off as well.
Yep, wait and see approach. Exactly, welcome. You get it. All it is wait and see. A lot of headlines, unless it's something that's being priced in, like we're expecting to get rate cuts in a few months, so markets are pricing it in. A lot of things that have uncertainty or are unknown require us to wait and see. Yeah, nice strong open. NASDAQ new all-time highs right there, 30,800. That is mind-blowing. We're going to be hitting 31,000 in no time. That is crazy, man. If somebody told you at the beginning of the year, or I take that back, if somebody told you in March when we were chopping our way lower, the war in Iran began, we were at 24,000 on NASDAQ. Somebody said, oh yeah, in less than 3 months, we're going to be above 30,000. I'd be like, you're out of your mind. No way.
Yeah, that would be insane. I mean, this is you look at this. This looks like a meme coin, right? It doesn't look like one of the most important financial indices in the world, right? Yep. So this is again, like, it's a bull market, but this current pace is not sustainable.
Yeah,
that's just that's just a reality of all financial markets. So this vertical parabolic move up is not sustainable. We're going to have to rotate. People will start taking profits.
In terms of rotate, what sectors do you think we're going to be rotating in and out of? Do you think the AI hype is going to continue? Obviously, AI is not going anywhere as much as people do think it's a bubble, but we still have the memory chips, we have the data, we have the energy that's required for it. It's more than just, oh, it's Anthropic. No, it's things like SanDisk, which is the memory unit. SanDisk is up over 4,000% in the past year. That also, almost like a meme coin.
Yes, I mean, like, geez, we've seen some insane stuff. That's obviously one example. Nokia out of nowhere, breaking out like crazy. Intel continuing to jump. Dell surging because Trump likes the CEO. Like, I mean, it's one thing after the other, and yeah, let's take a look at NVIDIA. I mean, we see the weakness here, short term in the NASDAQ.
Absolutely, good call. Yep, it's important. I was going over it yesterday. When you trade in the NASDAQ, day trading, and Imre, I love your opinion on this too. When you're day trading things like the NASDAQ and S&P, it is extremely important to be aware of where these equities are moving. The NVIDIA, Microsoft, Apple, Meta, Amazon, Google. If these are showing a positive, strong correlation and trend, then that's the direction we want to take. If it's a mixed bag, then we know these markets are most likely going to give us that mixed reaction.
Yes, absolutely. Yeah, without a doubt, especially if there was like an earnings surprise the night before or some other kind of fundamental news that's affecting a major component of the index, then that can help us understand directionally what we're dealing with, as well. And of course, like, here's what's really cool. We don't really have to guess, right? We can pull up NVIDIA, right?
Yeah, that's funny. I was doing the same thing over here. That's right. No more guesswork, guys. No more, oh, let me Google what's going on. Nah, markets got it covered.
Right. So here, go to breaking news. We can, do I really see anything that's directly high impact on this?
Nah,
Not necessarily. So this could be what? Combination of profit taking, could be a technical rotation. We could see some profit taking that's now accelerating into a technical rotation. 215. I love that. I love that as a target. I mean,
you got to go on the other NVIDIA, NVDA, just NVDA. I think you're on NVDA USDH.
Hold on. There we go.
Nice.
All right, there we go. All right, so yeah, we can see, we can definitely see that technical weakness here. I think the pullback level that market's identifying is fantastic also, because it ties in with where we previously had value, where we came back up out of. I mean, yeah, that said, I don't see like necessarily anything specifically related here that's triggering the sell-off from a fundamental perspective.
Yep.
Which means what? Are we suddenly going to start bailing on NVIDIA as a company? No, absolutely not. Is this likely to be a phenomenal buying opportunity depending how we pull back? Absolutely yes, right? So you don't want to just get carried away because you see the scary candle. You really want to take that into account. And again, always, this is how the fundamentals help support what we're looking for.
Yep, exactly. Something too, guys. Again, as day traders, we're a lot of times we're zoomed in on the chart. We're on a 5-minute, we're on a 15-minute. We could have pullbacks, right? Pullbacks last for days sometimes. Do not think a pullback is the end of the market.
No, pullbacks are healthy and they're very necessary. Very, very necessary.
Yep. And great point. They're healthy. We go straight up, just like Imre was mentioning before. That's not sustainable.
And the reason it's not sustainable, guys, is because who do you think is driving the market higher and higher ultimately? Is it retail volume? Is it us day traders? Is it even smaller hedge funds? No, it's very large institutional players. It's going to be banks accumulating positions. It's going to be the biggest hedge funds, the biggest asset managers, pension funds, university endowment funds. And what do they need? They need to be able to accumulate positions in these companies, and that can take weeks of time. So they need a range. When the market's just ripping higher and higher and higher, they can't effectively get themselves positioned. Okay. So taking a look here at gold, this is one of the setups that we were talking about before, where we have some value building. We have a range building here. And what I'm curious about is whether we break out the bottom of that range, create the micro range that I like to see, and then target the downside. Otherwise, what is this? This is just fair value building right here. This is still a range. This is not where I want to be trading.
No, absolutely. NASDAQ, I do like where NASDAQ's positioned at the moment. Real quick, yesterday, guys, I gave you a pretty clean call out on NASDAQ to hold VWAP, which it did. Tried to close bearish off the open. Similar price action like we're seeing now. We had our green candle close above it. Now, what are we doing at the moment? We had our push lower, into VWAP. We had our green candle close above it. This candle opened very strong to the downside. I would want to see this try to support. I might actually look for some long positions on NASDAQ here. Just keep stops, though, near the lows. Not looking to risk a lot on this. Really just looking to use VWAP as support. Coming off of the value area low over here, too. Obviously, the lower the entry, the better on a trade like this. But I do like that it's trying to hold that VWAP zone. Targets, because we're coming off of all-time highs, becomes that next all-time high. All we're doing is following the fundamentals. We're following the trend. We're buying the dip. And if it doesn't work out, guess what? We manage our risk. We stop out. We wait for the next trade setup. Yeah, let's dive into some gold. I'll share Imre's screen. We'll dive into a little gold there. I'm still waiting on some gold shorts. I don't think that area ever hit yet.
No, it hasn't hit yet. Let's see. So again, I'm just going to profile this up. You can see that right now this is looking like a failed reclaim of that value area low. And this is what we're negotiating right now. Right? So you can see we're even below the value area low here of this little range on a 15-minute chart. What do I want to see? I want to see value start to build below the value area low, just like it did here. Just like we built a range here, clearly defined boundary between the high and the low of that range. The difference is that we broke above that range back into the value area, right? So if we build a range here and we start trading sideways and then break out lower, that is a fantastic sign. It's just important to be patient. Sometimes you will get a trade where the first breakout just runs. For instance, here, like if you're looking at this little breakdown here, that first real breakout candle got you a good trade. Is that often going to be the case? In my experience, no. My statistical analysis clearly tells me to avoid taking the first sign of a breakout.
Yep.
Okay. So we can see structurally, we're dealing with this low here. Now what I want to see is the value start to build. Once I get that can start setting up some downside trades for me.
Awesome. There we go. Nice. Traders don't want to see pullbacks when they are in a trade, but when they are not, all they want is a pullback to end. So that's great. Very good point.
That's a very, very good point. And it's so true. There is always a pullback. There's always a pullback. And that goes whether you're in the trade or you're not in the trade, right? So you have to keep that perspective in mind as well. If you want to play just for the first immediate swing, and you really don't like the idea of sitting through a pullback, that's fine. It's just a shorter term way of trading.
Absolutely. Guys, I'm out of those NASDAQ trades. It's not looking good. NVIDIA is still dumping. Like I mentioned before, if equities are showing weakness, I'm not a fan of going long on NASDAQ. There's really no advantage of seeing NVIDIA sell off and jumping in longs on NASDAQ when NVIDIA is at such a high market cap and is so weighted in that NQ index.
Yeah, so we can see here, right, like ES is selling off in this first zone that I've identified, building momentum as well. But this is a high volume node. So what's going to happen in a high volume node? I would expect to see a gradual slowdown, right? And this is where I want to see value start to build. And if we reject the upper edge of this higher volume node, then we can get that move lower as well for a very opportunistic kind of short here, okay? But again, it's important to always keep in mind, what is the larger bias here that we're dealing with the market? I prefer to be a buyer, right? So I would rather see this weakness as an opportunity to buy at a better price level rather than as an opportunity to look for shorts, okay? So right now we're through that high volume node, just out the bottom. And again, I would not be surprised to see us build a little bit of value within that high volume node before the next move starts to take shape.
Yep. Had an extremely strong bearish candle on that first 15, guys. Again, short moves can happen on an intraday scale. Do not just buy every single little dip you see. And it's okay if you want to take a scalp, right? If it's in your momentum, it's lining up with your technicals. Just understand, again, fundamentally, we're still leaning more bullish. We're literally coming off of all-time highs today on the NASDAQ. S&P did not hit all-time highs overnight, so a little bit of divergence there. But tech has really been a very strong hold in these markets. What, Imre, your volume profile you have there, is that a weekly?
No, I think where did I anchor it to?
Look at that. Sellers are stepping in strong here. NASDAQ opened up, popped up to 30,800 and is now below 30,600. That is a 200-point range in a matter of 15 minutes. These are some extremely volatile market conditions. Got to check the VIX, right?
Yep. So the VIX is still, although we're up, on the day, a VIX of still 16 is not objectively a high rating. It's actually a very low rating. So what we want to be looking at for the VIX right now until we start reaching like normal readings of around like 19 to 20 is the rate of change in the VIX. So if the VIX is going up dramatically quickly, even if it's going from like 15 to 16, that's a huge jump on a percentage basis, but the reading is low. So we want to look at the rate of change in the VIX right now. And just again, right now, very closely keeping an eye on what we have here. We see some sustained selling and buyers not showing up at these high volume nodes, at least not yet. Okay. So what that tells me is that there is not a lot of willingness to stand in the way of what is some selling right here. A lot of it is largely driven through a combination of profit taking and then some opportunistic short selling the market as well. Okay. Now taking a look back at gold. Now, here's what I want to see. I want to start seeing that value start to build somewhere in this zone right here. That would be plan A. Plan A in ES would have been waiting for some value to build somewhere in this high volume node, perhaps a failure, targeting the minor support zone, but we didn't have that opportunity. And that's fine. There's no reason to have to FOMO into a trade and chase this market. Okay, this is not the best trade of the day. I don't think the best trade of the day is shorting ES or NQ after we've already dropped 200 points.
No.
Right. So,
but we also don't want to catch a falling knife.
Right. Exactly. And we can take a look at NQ here as well. And what do we see? We see we're coming into this volume node, and I want to see if we have a defense on the lower side of that node, right? Which I think is very, very possible. So plan A in NQ would be seeing what a defense of this node looks like, right? And if I'm looking at what we're negotiating right now, I think we're negotiating pretty much all of this. We can see we're breaking back within the value area high, right? So if we don't get a defense there, and a short trade opportunity could be a poke back above this high volume node, then rolling over, and then targeting, I'd say, the 400 to 300 region roughly. Right? So lots of opportunities, lots of different ways to play the NASDAQ as well. And again, just keeping an eye on our friend gold here.
I know, man. I was really looking for gold to pull back. It did just hit my first take profit level was 44.55. That was a market level as well, MRKT level. Now the market level is updated to 44.30. The next downside level is 44.30 on gold. Would love to see a pullback area for a short position on gold, just following that overall fundamental trend.
And there we go, right? So here's that value building. Technically, here was a setup. We missed it. I think we were looking at other markets, but it's the same concept. Look at the value that built underneath the value area low, and that breakdown is what can lead you towards the promised land, right? So it's just how I love to trade breakouts. It's being a little bit more patient. It also allows me to keep my stop and my risk a lot more defined, right? I don't have to short here with a stop above the highs.
Awesome. Awesome. Wow, NASDAQ just off a cliff today, man.
Okay, so
right off the open.
Testing that bottom area of this high volume node and breaking lower, right? So you can see that here. For me, this is not an entry. This is not a trade setup that I would take, right? What I would really want to see is value building. I don't want to trade emotional price reactions. I want to trade the migration of value.
Yeah. Yeah, we're in a key spot here on ES too, 75, 77. This has been support since, what was that, last Friday. Friday we held support here. Monday we held support. Tuesday overnight we held support here. And here we are again, trying to get a little bit of a pullback. Nothing crazy. Wouldn't say just jump in because we're pulling back a little bit here. Just acknowledge the levels and wait for the reaction. Can we look at N225? You mind pulling that up on market? Thank you, sir. Wow, gold on a quick little pullback here too, from that 55 to 71 very quickly.
So we're in the New York session right now. There's no reason to be trading the Nikkei, right? Like I'll just be being honest with you guys. Like you want to make sure that you're trading the right asset at the right time. When Tokyo is open for business, that's when I want to be trading the Nikkei. I do not want to be trading the Nikkei when the volume in it is so much lower. I want to be trading where the volume is concentrated, right? So, likely what we're going to see though, depending on if today we have a slaughter in equities, what are we going to see with the Nikkei? It's probably going to have that same follow through, right? So that's where you can start looking at what's happening in one major market and how it can impact another. But would I be looking at trading this at all right now? No, just because of the time of day.
Awesome. Okay, good breakdown, good analysis. Missed that move on gold. Listen, man, no move is missed. There will always be another move, and markets are always moving, with or without us.
Yeah, exactly. Like think to yourself. There was one opportunity that was missed. Let me just go back to TradingView for a second here. Let's take a look.
I think this pullback might be presenting a nice short opportunity on gold. Just got to see how it wants to play out. 30-minute candle closes in 8 minutes, guys, right? It's always important that when we're trading on a 5-minute, we're also aware of those higher time frames.
Yes, absolutely. So you can see here, we didn't get value building, below that structural lip. So what does that mean for me? It means that I'm not looking for a breakout trade. I might be looking for what? A pullback trade, slightly different playbook. Right, so we can see here, we pulled back to this structure. And again, this is where I'd be looking for a potential opportunity to start to form. Now, if I want to trade a pullback, what do I need? I need a swing. I need a swing point to break. Remember, we just went over those major and minor swing points. In this leg up on a 1-minute chart, I don't see a swing point that's formed yet that would allow me to get into this trade because I don't want to be shorting all the way down there. Okay, so what do I want? I want to see here, now we have a minor swing point that's just formed. If we can make a new high, that'll confirm that minor swing. A major swing to form would be even better, but if we start taking that out, that could be one potential trigger to get in using price action.
Awesome. Do you think ICT concepts for entering the markets are valid with the right fundamentals?
Yes, I think any entry method is valid. I think the entry is the least important part of the trade. But it's the one that most traders obsess the most over, right? So it doesn't matter what you use to get into a trade. Oftentimes, the simpler, the better, right? So if I'm looking at day trading, what I'm looking at is the interaction between aggressive market participants and passive liquidity. I don't trade off of candlestick charts. I trade off of what are called price ladders, right? So I'm looking at that interaction between the time and sales and then what's in the cumulative order book. And I want to see if aggressive market participants can overpower passive ones, or if they're going to be absorbed by passive ones. So my entry triggers are going to be a little bit different. If you're looking at purely price action, you can use anything. It can be a moving average crossover. It can be an engulfing candle. It can be a swing point break. It doesn't matter. It does not matter.
Awesome. All right, let's see. We have ISM data right around the corner, guys. No need to rush. Wait for the data to come out. And after that, look for trades when noise and dust settles down. What do we have today at 10? We have ISM non-manufacturing, correct? Services then?
Yep. 10 a.m.
Nice. And factory orders, not the biggest of reports, but still coming out at 10 a.m. It is 9:55 now. Yeah, man, welcome is absolutely right. If you're not in a trade yet, you haven't found your zones, take this time to go over your analysis, break down those areas, but do not rush into anything.
So we can see on gold, what we're negotiating right now, again, is the bottom edge of this value area low that we've broken out of previously. So if we reclaim that, that sets up potentially the stage for buyers to enter the market with force. If we don't, and we start seeing sellers stepping in to defend that previous area from where we've broken down, tells us that there's still underlying weakness in this market.
Awesome. I love this area right now where we're at right here on gold. To see if I could pull that up real quick. Give us a pullback area, use these recent lower highs as sort of our stop loss if we do want to continue lower. Could look for a small stab on some shorts. Again, got to be careful. News in 3 minutes. We're better off just being patient and letting markets have that news come out, digest it, and either see if there's a reaction or not. But I'm definitely a bit more interested in gold shorts than longs at this point, but be a little careful. Let's see what else. NASDAQ, ES and NASDAQ did end up holding that support. This is the same support area NASDAQ held yesterday. So same zone, same range, same price level. I would want to see a retest, but again, quite honestly, not looking for anything here because we have news in a few minutes. Yeah, that's it, man. Patience. Patience is key. Let's see. Oh, you know what? Let's pull up market and we'll look at the data because it's going to come out in a few minutes. Is there anything else you want to give us some insight or input on to any of the data that comes out today or this week?
Yeah, I mean, tomorrow we're going to have those initial jobless claims. I think that's going to be very, very important. Then obviously we want to keep an eye on those non-farms. So I'd say from a news release perspective, it's very straightforward. We want to be keeping an eye on those data releases that we know are going to be coming out. And then we want to be keeping an eye, obviously, on any war-related headlines also.
Yep, absolutely. Absolutely, man. Even, again, guys, we know that we're getting headline after headline. It's over. It's not over. We're continuing. We're attacking. We're not going to attack. But there's still headlines. They're still coming from the higher-ups, right, whether it's the president or Iran, and it's still going to, at some point, have a pull on the market. So as much as we know that for the most part, 90% of these headlines markets are just ignoring, we still want to be aware of it because that chance that a big one does come out and we get that reaction, we don't want to be the one that's like, well, forget about the headlines right now. No, there's still market moving headlines. Gold shorts playing okay from that entry at the moment. Nothing crazy. Again, be patient. We have news in a minute and a half right now. ADP was higher than expected. What are you expecting for ISM non-manufacturing?
All right, so I mean, we can see the services report here. Forecast is at 53.8. The prior is at 53.6. So we're looking for like a slight tick up. I mean, that would still put it within range, right? So I'm not looking for anything to be extremely crazy here to come out. We would need a pretty big miss, either above or below, for this to be significant, in my opinion. I also don't necessarily think that this is going to be a very market-moving report. It's going to be, frankly, overshadowed by everything else that's happening. But we'll see. It could definitely cause a short-term fluctuation.
Yeah, no, I agree 100%. It's sort of like a new home sales or pending home sales style of a report where it's like, it's great, it's helpful, gives us some insight, but in terms of day trading and the stock market, very rarely has that big impact that we usually look for from some type of headline.
Yeah.
All right, here it comes in, what do we got? A few seconds? 13 seconds, ladies and gentlemen. Let us know, what do you think, higher or lower? And also, let us know in the comments, guys, what are you trading right now? After we get the data and the reports, we'll go over some more technicals. We'll give you guys some price levels, and we'll see how things play out. All right, there is the news. Let's see how it comes out. Higher than expected for ISM manufacturing.
Okay. All right. So we got a little bit of movement here in the report. We can see gold kind of holding steady. We have a major swing point here. So far, this release is bullish for gold. So far, we'll see.
All right, be careful, guys. In any positions, make sure you monitor it correctly. Don't force trades. Don't stop out early. No, when you enter a trade, guys, you should almost expect to lose so that if you lose, you're prepared. If you're taking
Exactly.
a trade and it blows your account, you're too heavy in size.
Exactly. So, a potential short setup could be looking at a break of that low with force, as we're approaching that low with force, and then looking a little bit beyond that low, trimming some at the low if we get there. For bullish setups, we would really need to reclaim, this area here. And obviously that lines up with a major swing right here as well. So there is an opportunity to be a bit of a buyer. I wouldn't blindly buy on a break here. I'd still wait for value to build above that swing and then start targeting higher up, right? So definitely two plans here on gold. I think both can be equally valid. It just depends on what kind of market scenario we get. And then
Absolutely.
taking a look at ES, a little bit of a pullback here finally, holding from that minor support zone I've got cited. It'll be something very similar in NQ as well. We can see we're starting to build value. Personally, for me, in a situation like this, there isn't really a trade to be taking. I wouldn't want to short ES unless we break that major swing point down there. From a purely price action perspective. And I wouldn't want to be bullish until we reclaim, let's say 7,600 up here as well.
Yep, awesome.
Right, so
guys, wait for those reclaim levels.
Gold flirting with that break of the trend line. ES, we can set an alert up here as well. Right, so it's really just a matter of being patient and like nobody's holding a gun to your head to get into a trade. Nobody's forcing you to do anything. There's no reason that you have to place a trade if your conditions have not been met.
Absolutely. Absolutely. And fundamentals, guys, should be part of those conditions, right? Technicals are great. Having a system, having a strategy, something that you can consistently, a routine that you follow with. But fundamentals have to be a part of that routine to give you that advantage.
Exactly. So if we pull up, for instance, ES here, we can see that rating for the ISM non-manufacturing PMI, right? We have a reading of 54.5 towards the upper end. It should be bearish for the market.
Yep.
Right? So we have our bias in line here for that data. And for gold, let's see.
Man, gold's chopping around right now. It does not want to move lower. It is trying its best to gain that momentum back to the upside. 30-minute time frame on gold definitely gave us a bit of a possible reversal candle too here. But we would really need to clear above 44.80 on GC futures. If we do not do that, I do think bears are still in control.
Okay, and then we can see that for gold, the report obviously should also be quite bearish. So we have our fundamental driver in place. We have our technical levels in place. Gold still struggling, and again, it's like, what's the rush? There's no hurry. There's nothing that I have to do other than.
Yeah, exactly. If you're looking at the market and we're not at your level, we're not at your predetermined zone, your predetermined spot that came with your pre-market breakdown, don't take any trades. If we're not at your zone, we're at a no trade zone.
So here's a perfect example of what I mean with these swing points, guys. If we take out this minor swing point on yes, and this is a minor one, not a strong one, you could get into the trade a little bit earlier, but it's a weaker entry relative to taking out a strong swing point. So the choice is yours. Something that I sometimes would consider doing if I was trading off of price bars would be maybe splitting the position. Maybe I take a part of the position, a smaller chunk, or a bigger chunk, depending on how you want to flip it, on the break of the first swing, and then scaling in if we break the second one. So there's many ways to get into trades, many ways to get out of trades. There's no right or wrong way necessarily. It's the way that works best for you.
Yep, absolutely. It's funny. I always say every strategy in trading works, just like every strategy in trading doesn't work. If you don't have the right mindset, you don't have the right consistent framework, you strategy hop a bit, you don't have the right risk management, it's not going to work. If you have the right risk management and you're following rules, you can make any strategy work. Just got to be consistent.
Exactly. The technical piece, it is what it is. There's a million and one ways to read a chart. The fundamental element has to come first. It has to come first.
Yep, absolutely. What's up, Andrea? Good morning. Regarding your volume profile to use weekly, I missed that. Oh yeah, where did you end up plotting your volume profile?
So I like to look, here's the filter I use. What are we negotiating right now? So it's sometimes that could be the week, sometimes it could be an important swing high or swing low, but what are we negotiating right now? So in gold, for example, I think what we're negotiating right now is this area here. And we're trying to figure out if fair value belongs in this area or not. And there we go. Gold is flying around right now. Okay, yeah. So same with ES, right? Like if I wanted to look at ES, I wanted to zoom out a little bit. What do I think we're negotiating right now? I think we're negotiating like this swing, maybe this swing here. So it doesn't really matter whether I anchor from here or from here. I also could make a very compelling argument that we're negotiating this range, and you can see that we're right at the value area low of that range. And right now we're reclaiming that value area low. So again, that is a more bullish sign for the market, but we have that fundamental driver. So we have that tension between the technicals and the fundamentals. And pay attention to this swing, right? So this is the weak swing that broke. It's a weaker swing, gets you a more aggressive entry. This is the stronger swing. Gets you a little bit more confirmation, but a later price. So there's a million and one ways to do this. And you can see here, we got a huge spike through that swing low, buyers responded, and then moving through the top, right? So now what do? Now we can say this idea is off the table, it's invalid, and we want to wait. If you set a sell stop there, you would have taken a stop out. If you were waiting for a price to kind of consolidate, you probably wouldn't have taken an entry, right? You want to wait for possibly that price bar to close. But that happened very, very quickly, right? So now it's just a matter of waiting to see what it is that we get and whether or not this buying response is going to hold or not. But look at where we are. We're just back into this range, right? So very clearly, there are buyers interested in defending this area. Now it's up to sellers to tell us whether they're interested in defending this area. If they're not, I do think that potentially opens the door higher from a technical perspective, But we cannot ignore the fundamental driver that came out at 10 a.m. Right. Although I did say, that driver is likely going to be overshadowed by other things going on. We still don't want to necessarily ignore it wholesale.
Yeah. Nope, absolutely. Never ignore it, man. Never, ever want to ignore a headline or an economic release. But we do want to be aware of it, right? And we want to be aware of the weight that it holds on the market.
Yeah, absolutely. For me personally, like I've been sitting on my hands this entire time. This has been a very chaotic, messy open. I think catching the short here on the open would have been very, very difficult to do. With the benefit of hindsight, there is a bit of a micro range that took place here. Would I have taken that trade though? Personally, probably not, because I don't think there was enough room to the downside to take it. So I don't think the reward to risk proposition would have been attractive enough. This slice through high volume areas was contrary to what I would expect the market to do. So I wouldn't have a reason to swing for the fences necessarily from a technical perspective and target, something like this.
Yeah. Gold really giving us a range bound market today, man. Gave us that drop lower, came back into its volume area high and low. It's definitely a tough point. Would rather be more short than long, but I do see a possible short-term bull move on gold right here. And like you said, that was a more bullish catalyst on gold with the economic data that came out 10 minutes ago. Oh, yeah, and guys, don't forget, man, like and subscribe, like and follow. If you're here on Twitter, like and repost. But join us. We're here every day, man, Monday through Friday. It's either me, myself, and Imre, me and the lab, or me and Jeev. But we're always covering the open for you guys. We're always covering At 8:20 we go live, so if we have any important economic data at 8:30, we're already live, we're covering it, and we're prepared. Again, an advantage that every trader needs and can have in the market. We're now doing live for free for you guys on our YouTube and X platform. And don't forget, guys, sign up for Market. That's our main dashboard that we're using to get this news, to get the economic data, to get the headlines that come out, and really funnel it for us and filter it for us. So we're not looking at a billion pieces of information. We're looking at the most important pieces of information.
Yes, absolutely. Right. And it's so powerful to have something like this that helps consolidate all that information in one place. We can see still the day trading bias is slightly bearish. It hasn't flipped yet. And what are we again negotiating? We're right back in that area that we had previously broken down from. So although the bias is slightly bearish from a purely technical perspective, I'm very, very neutral at this point because, and here's what I love about technical analysis that remains objective. We're simply back where we had previously accepted fair value. So if you really wanted to take trades contrary to the bias, you would have to wait for pullback, consolidation, break of a range, something like that. But I think the upside is limited and it's fairly messy because you have that range to target up there. So what I'd much rather be looking for would be a failure once more to reclaim this value area low and a gradual rollover. I think that's the more exciting trade in my opinion.
Yep. I know. I'm still waiting for 4,500 to roll around. It took a little detour first, but I'd like to short that value area high up there. We got some resistance, 45.11, 45.20. Overnight was a great point that we rejected. We'd much rather sell highs than sell lows, guys.
Yep, could not agree more. I think that's a fantastic level to be keeping an eye on. And yeah, here still equity is still chopping around. We have a new important swing high actually here, or swing low, sorry. So that's a major swing low that we can keep an eye on.
Yep.
And again, for me to get bullish, I need to see value start to build up here. If value can start building up here and we start migrating that value higher, that's my trigger to be playing ES to the upside. Very similar setup for NQ.
Yeah.
So we can see this is that high volume node that we need to reclaim. And we can see that the profile starts to get thinner to the upside up there.
Yeah, good call on checking on ES and NQ. I love where ES is at. Again, especially even on like a 15-minute time frame perspective. We see a rejection candle at 9:45. We had broken out of the orb, right? We always circle back to strategies wise. You could use any strategy in the world. If you don't have any knowledge or any understanding of fundamentals, then it doesn't matter what your strategy is. If you don't have any understanding of proper risk management, it doesn't matter what your strategy is. But once you put these pieces together, things start to roll in place. Let's pull up market again. We got some headlines from Fed Williams. Remarks about upside risks to inflation have increased. I'd love to get your take on when Feds have some type of comment like this. Now, obviously, this isn't something that they come out, they speak, and markets suddenly shift. But it is some insight into where these Fed speakers are sort of positioning and considering for the future.
Yes. So one thing's the body that actually decides monetary policy for the U.S. is the Federal Open Market Committee, right? So that's what FOMC stands for. And it's a committee, right? As the name implies. So a lot of people might mistakenly think that when it was Jerome Powell, who was governor of the Fed, or chairperson of the Fed, that Powell sets the rates. He actually does not. He does not set the rates unilaterally. The idea is that you have a committee of governors who each are coming from different backgrounds, different philosophies on monetary policy and the economy. And one governor's comments do not speak for the entire committee as a whole. And there are some governors that are known to be hawks, known to be doves, right? So you want to take everybody's comments with a bit of a grain of salt. And what Williams is saying here is he's signposting that he personally believes that, tightening is more likely in the future versus easing, right? That's what Williams believes. That's not necessarily what the entire committee believes. Now, I think that Williams is generally a fairly straight shooter, in my opinion. And I think Williams's comments here are factually correct. So, but that does not necessarily mean that tightening is going to happen at the next meeting. What I think, if we're talking about the next FOMC, what's going to be really important is looking at any changes in the language of the statement. So if there is a general shift in the members of that committee, that they see a gradual shift in terms of inflationary pressures being more of a concern, that could be taken as a hawkish FOMC, even if interest rates don't budge.
Okay. Interesting, man. Good breakdown. Good analysis on that. Thank you. Always appreciate Imre's insights. Guys, again, make sure you run that like button up. Imre has some of the best experience in these markets. So it's awesome to have him on these Wednesday episodes to give us some insight, give us some clarity, some breakdowns, and really just some powerful knowledge, right? Knowledge is power. Market in the morning is giving you that power.
All right. Like gold, I think, Kev, gold, very, very interesting right here. We can see that we're trying to build some value up here above the value area low of this area. But I mean, this is where visually I can see buyers are losing steam. We're starting to see a little bit of a loss of steam here, but another important swing point taking shape. So this is where I love to look for breakout setups. Again, if we're above the value area high, we could build some value here and then we start migrating. That's fantastic. Otherwise, losing that swing point, I think, would be very bearish and set up, again, another potential rotation lower for gold. Just got an alert that swing was taken out. Now, again, do you blindly want to enter just because a swing's taken out? Of course not, right? The green light really is saying, okay, if you want to keep things simple, can we close below that swing point with a candlestick on its lows? If you're looking at order flow, can we see a lot of aggression, a lot of sellers knocking that bid lower and buyers not stepping in, not absorbing that selling pressure, right? So that's what we want to see from an order flow perspective, and from a price action perspective, that would be reflected a little bit later. You will be later, but it would be reflected by a strong candle closure below the swing.
Yep. Let's see. Some more headlines coming in. Let's see if we got anything. Nope, not yet. We got one under our all. Netanyahu, Trump agrees on Iran issue. Israeli ministry says. Looks like it hasn't come in yet. This might be coming out right now. Check under, I was going to say pull up market and go over to our news feed tab on the left and hit all. Check that out. Trump agrees on Iran issues as real military.
Yeah, I mean, I don't really see that as being too important yet. I mean, you gotta understand that behind closed doors, I think there's a lot of tension right now between Netanyahu and Trump. A lot of tension. Publicly facing, they will be in lockstep. They will all say the right things and be exactly on the same page as one another.
Yep. There's a lot of tension. They should just get a room already.
But yeah, behind closed doors, like, don't get it twisted. Trump is not happy with Bibi whatsoever, right?
Yep.
Because it's not the relationship between Israel and the U.S. is very, very complicated. From a security standpoint, right? So a lot of people ask, what does the U.S. get out of its relationship with Israel? And you have to go back, you have to turn the clock back to 9/11 and what became the global war on terror. You have to look at that. You have to look at how that was a paradigm shift in American thinking, okay? And you have to understand that in that moment, there was a clear enemy, right? Which was so-called radical Islam. That was the enemy, and they, Israel and U.S., little Satan, great Satan, the Israel's intelligence gathering capabilities were seen as a tremendously vital asset. Not only that, but Israel was de facto an extension of American power in the Middle East. and the only place where America could effectively project that power, right? So that makes the historical relationship very complex and nuanced. In modern times, I'm saying I'm going back just the last couple of years, that relationship is even more complicated because American security is not necessarily under threat. And when we have this MAGA movement, and I'm not commenting on the politics of it, I'm just commenting on how social sentiment can shift. When you have that MAGA movement and they're talking about America first and American security is not under threat, and we have issues with domestic economy, domestic security, et cetera, what does that cause? It's going to cause backlash against that historical ally, right? So just explaining why you're seeing that shift in domestic sentiment towards Israel, why you're seeing, I'm not commenting on what has happened or what hasn't happened. I'm just comparing what's happening now from a sentiment perspective with what's been going on historically in the past.
Okay, awesome, man. Welcome. I'm not putting that message on the screen.
Yeah, I think the other thing you have to understand with Netanyahu is that the more Israel is at war, the better it is for him personally, right? So whenever you have a leader whose personal interests are not necessarily aligned with this quote unquote greater good of the country, man, like you're gonna see some messed up stuff. You're going to see some messed up stuff, to say the least. And this isn't a politics podcast, so I'm trying to keep my opinions as neutral as possible, but while giving a little bit of color in terms of my opinion of what's going on here.
Yes, sir. Yes, sir. Guys, let's take a quick look at some ES and NQ right now. Obviously, a very tough point. We ended up trying to reverse off of that 75.76 that we had mentioned before. We had our bullish candle here on the 15, trying to see if we can hold and continue back to the highs over here. VWAP is located right at 76.02. We are above VWAP already on NASDAQ, trying to hold it as support. Again, ideally, our fundamentals are still bullish. We would want to try to find a good buying opportunity in these markets. And seeing that we did sell off the open, hopefully this dip, this pullback here can be that buying opportunity to take some ES longs, trade it on that 15-minute time frame, make our way higher. I would like to try to hold these longs and see if we can on this 15-minute right now that's currently red, try to flip green. And what I could even look for if we want to be extra patient is not enter anything until we do flip green on this candle. Once we start pushing higher, we have about 6.5 minutes left on this 15-minute time frame. That's 6.5 minutes left for the market to choose and decide and tell us, are we pushing higher or are we just going to stay within this new range that we created? Fundamentals leaning on our side for the bulls, but we have to remember we're not coming off all-time highs overnight, but we're at all-time highs just yesterday. So just be patient, be careful, let markets close, let candles close, right? Give markets time. Don't feel the pressure. Like Imre said, man, I say the same thing too. It's like nobody's got a gun to your head saying you need to take a trade right now. NASDAQ in a low volume area right here, just rejected a fair value gap and a low volume shelf. Again, ideally, we're looking for support somewhere to support our bullish fundamentals. Flip watch, what do we have on ES? U.S. Navy enforces blockade. Flag tankers in international waters near Karg Island. So, what could flip it some more bearish is an escalation. But we've seen escalation start to pose and then nothing happens. Pull Imre back up over here. Imre, are you seeing any good price levels? Any possible trade setups? Really getting a whole lot of nothing, I feel like, today on gold and ES and NQ.
I'm right there with you, still sitting on my hands, not seeing too much. To me, I pick a direction based on the fundamental bias, based on the technical regime, and I like to stick to it, right? So, I'm a buyer of stocks from lower levels. I just need the right setup, right? So for me, the ES reclaim level, we haven't reached that yet. Similar with NQ, we're not quite there. Like we're hovering above, we're trying to build value, but it hasn't been convincing, so Still very much, for me, wait and see here.
Yep, absolutely. Definitely a wait and see zone. Definitely wait and see. Remember, if we're not at your level, you're not taking any trades. Let's see. What news? Yeah, you have a question?
I was going to say, this might be one of those sessions where like we might get better opportunities a little bit later in the afternoon. But yeah, so far it feels to me like we're still trying to figure out where the dominant direction for the day is going to be.
Yeah. Yep. Just remember, guys, pullbacks are healthy, though. Hopefully we can get this pullback here off the open and make our way back higher. This zone, this level, this area, again, trying to hold, but then sellers come back in. Be patient. 15-minute time frame, trying to get back green again, like we were looking at before. So we're trying to hold this zone right there. NASDAQ also held that low volume shelf we created and fair value gap area very nicely to a tick right there. Now just, let things play out. Let things cool down. You don't see your setup, don't force anything. There's really never a reason to force a trade. And if you do, you have to know where your stop loss is. You have to know how much you're risking per trade. Or else you're going to take a trade, get stopped out, take another trade, get stopped out, take another trade, your account's gone. Don't blow your accounts in 3 days. Have proper risk management. One of the few things we actually have control over in these markets is how much we're risking per trade. And sometimes we don't even control that if we get some type of headline that wicks us right through.
Yep, exactly. You have control. You have control over your sizing.
Yep.
You have control over your sizing, and then you have more. Yes, in the event that something insane happens, you won't have necessarily control of the exact level that you exit, unless you have a limit set. But you have control really of when you enter the market and how much risk you're putting on.
Absolutely. What do you guys think about UJ up at 160 with the Bank of Japan saying they could intervene at these levels? My apologies.
I think the yen is a very tricky trade. Yes, we're near those intervention levels. Does that give me any desire to blindly short it? No. I love trading FX when the conditions are right. I think the yen is a very dangerous trade in my opinion.
Okay, why do you say that?
So the intervention, it's no secret, that we're nearing those intervention levels, but I just don't see the right kind of environment where I see sustained strength in the yen. So we've seen the BOJ intervene. We saw dollar yen sell off. We saw dollar buyers bring the dollar right back up. So now what? Are we playing chicken with the central bank? Like that doesn't feel like a prudent trade to me. At the same time, I don't really see a reason to be a buyer of dollar yen at what I think are very expensive levels either.
Okay. Awesome. There's Imre's breakdown, what he's seeing on it. And you said you do trade it? You trade it often?
So I love trading FX. I don't trade FX often throughout the year, but when I do trade FX, I trade it with tremendous size, right? So I'm very aggressive. When I trade FX, my position sizing and notional amounts is going to be in the tens and tens and tens of millions of dollars. But it's not often that I feel compelled to go into FX, right? So if I had to focus on FX right now, I'd probably be looking more so at something like the Aussie dollar and the Aussie crosses. I like that as an expression of risk on, risk off. But the yen scares me.
Okay. All right. Good. Don't forget about XAU. Yeah, absolutely. We got you. You want to cover a little bit of gold one more time?
Yeah. All right. Let's do it. We can take a look at gold.
VIX below 16. Right. Good call. Yeah, hopefully that weaker VIX could help support ES back to the upside here. Look at that. Almost on that 15.
All right. So taking a look at gold here, we saw a rejection of that strong swing low, trading higher. Do I see a trade here? Nope. I still don't, I'm afraid. I still do not. We built value here, failed to migrate higher, rotated back down, and now we're negotiating this. Okay, so we can see that there's false breakdowns here, a false breakout up here. Eventually value is going to migrate, but so long as we're in this blue box, I would not be really interested in trading gold. What I would love to see, again, for an upside trade would be building value here, just like we did here. The difference is instead of a spike through the top, we see a sustained hold. That could get me bullish to maybe target just below 4,500 or so. To be bearish, it's the same thing. Below that swing, I'd want to see value build, and then I want to see strong breakdown, and then I target that swing low, this swing low, and then lower levels below that as well, potentially. But as of right now, gold is so boring, in my opinion.
It is. It's boring is the best way to explain gold right now today. ES continuing higher off the long entry. That's great to see. About 5 points in the money at the moment. Would like to really just see it make its way back towards the high of New York session, which is 76.15.
Very possible. Very, very possible.
Just got to breach that point of control we see there on your chart, which is right above us, right? That's cool. VIX, VWAP is also right up here. We mentioned before, Jaleel in the comments mentioned VIX below 16. That's great. Nice rejection on VIX too. Beautiful. Yeah, if we get some strength on equities, that would definitely send us on home to the upside. Right now, NVIDIA has had nothing but red candles on the 15-minute time frame since the open. Meta also running into resistance. Microsoft's at new low of day. Google struggling to get back above VWAP. It's just a stronger mix of weaker equities right now. So I'd be very patient, and I'd probably size down if you are looking for a trade in these conditions.
Yeah, I'm looking at sectors like energy's holding up. Financials are soft right now, but that doesn't look particularly super bearish to me in financials. If we could see some strength come into financials, that'd be great. Gold miners, great. Let's see what else is interesting. SMH still holding strong as always. Tech drifting. The rest of the broader tech sector drifting a little bit. For you absolute small cap savages out there, biotech, right? And telecom, obviously another really important. That's just in balance, just chopping. So equities is a mixed bag. If I'm looking for single names, I'm looking for potential buyers to defend financials. Maybe we trade into this gap. Not really wanting to be aggressively short financials. And I'd be looking for, let's see. Yeah, that's not a very interesting chart to me, actually, the semis. Not very interesting.
No high quality setups today, guys. Everything's been on the lower range bound. We had fantastic moves yesterday and the day prior. I always like to sort of tell people, like, look at markets like you would look at seasonality, right? We're not going to, if you're in a state or a country where there's like summer, winter, spring, fall, even just rainy days and nice days, right? Or even fueling up a car. Markets are going to drive, and that drive is giving us money, and then it has to park for fuel. It can't just keep on moving. Markets got to take a break, and when it takes that break for fuel, that's when it gives us this chop.
Yep, very well said. I think we can call it there, Kev.
Yeah. All right. We got it. We got a couple more headlines, real quick. A few more headlines. Nothing crazy. Netanyahu says Israel, U.S. forces ready for Iran action if needed. Israel and U.S. forces are ready if needed. Just the same things we've sort of been covering. So, like you said, it's not anything that the market's going to take in and just give us a crazy dump from. We're just not going to dump because of this one little headline that is nothing really new, right? Is that really new that Israel and the U.S. are ready for things to pick back up? Absolutely not. But yeah, no, great show today. Imre, appreciate you for being here, man. Absolutely killer. Great information. Gold nuggets all around, man. You're the best, dude. Thank you for being here today.
Yeah, thanks as always, man. Thanks for being here as well. See you guys next week.
Absolutely. Guys, have a great rest of your day. Make sure you like and subscribe. Join us Monday through Friday, and Imre is here on Wednesdays. All right, everybody. Take care. Peace out.